Hey everyone, quick reminder before we get started. Today is the last day to get 10% off on any of the trading courses that we offer here using the coupon code 10%. So the number 10 and then the word percent will get you 10% off any of these courses here, classes, veteran, and beginner program. Again, the coupon code is 10% in my horrible written content right there. All right, quick look at the S&P 500 here. I've got a daily chart in front of me here. You can use SPY. Some people prefer SPY. Same. You can see here that today we are seeing a drop. Today is today is the 7th, and we saw a market drop here a little bit, nothing significant. But last week I mentioned that we want to be cautious around this area here. Given where it is, especially when you look at like the monthly chart. And so it looks skeptical at this area. It looks like it may be prepping to retrace down. And part of the reason again was because we're looking at the RSI. So I've got the RSI here, and you can see that we're in extreme overbought territory. Again, the last time we saw this kind of overbought, was right around here in 2008. We saw a big drop, not suggesting we're going to see a massive drop, but when you have this sort of overbought conditions happening over and over as the market continues to go higher and higher, you need to be cautious about that. So be careful about this as we approach 2000 on the S&P. Earlier today, I tweeted out about Apple. So we're taking a look at Apple here on a daily chart, and I said this high would be an important area to close above if it wants to go higher. You can see that it did close above it. So right now, last swing low to that swing high, it's broken above it clearly. We look at the 127, which puts it around 98. So there's about a 70% chance it's going to hit that 98 level. And then if it breaks through 98, look for new highs 102. So I am bullish on Apple. I expect Apple to retest the highs here. Look back on a monthly chart, and there's a very, very high chance that we're going to retest that high there in the next probably week or so. You got earnings coming up soon as well. So I am bullish there. Look for it to continue to the upside, and then once we get there, we'll have to assess where it can go from here. If it is able to break through these highs, expect it to get to around $127 on the monthly. It's going to take a while, but I would expect that to happen. While you're looking at the S&P as well, the one market you may want to also pay attention to is gold. Traditionally, there's been an inverse relationship between stock markets and gold. That has not been the case for quite a while now, but I am paying very close attention. Now, I am long gold. I think this is a great opportunity to get long if you're interested in a longer term move here. Not a move I'm talking about taking a few days, but several months. If the S&P starts to pull back, I think we're going to start to see gold push up. So pay attention to that, and we'll see from here. Either way, given the area it's in, I like it long. Stop below this low right here. So low risk trade. Stop below here. Looking for a move up to at least 150 if you're playing GLD. You could play the index, the commodity as well. But otherwise, I am bullish on gold, looking for a move to the upside. So we'll see. All right. Hope that helps. If you guys have questions on any markets or anything like that, feel free to hit us up or hit me up at Ratio Trader on Twitter. Otherwise, we'll see you guys next time.